Hey everybody, Mike DeSepoli, Heritage Financial Advisory. Welcome to Heritage Insider Weekly for Friday, April 10th, 2026. Hope you're all having a great week. We are back again to update you on the markets and the economy. We have a little bit of a makeshift setup here this week as I am traveling with the family for a couple days, but we had a lot of important things went on this week in the markets, far too important for us to miss an update as I had promised that we would deliver last week. So we may not have the best lighting, we may not have the best audio quality, but nonetheless, we will get you the information that you need. A lot went on this week. We'll start with the easy one, and then we'll get to some of the more complex issues here in a moment. We did have a CPI report here today, Consumer Price Index, giving us a read on inflation, and we did see an increase in the CPI, which was widely expected given the recent increase in oil prices, right? Naturally, with the Strait closed and the war ongoing, there was a large expectation that this number would be above expectations. What's important is that it was, even though it was above last month, it did not come in too far above expectations to the point where the market really basically shrugged it off. Okay, so that's a good thing. We're seeing most of the gains in the CPI attributable to energy prices, right? So we're looking at a move from 2.4% to 3.3%. A lot of economists expected this to be closer to 3.6, 3.7. So we will take that. Again, we don't want to see any increase in inflation as it pushes back interest rate cut expectations, right, from the Fed. But nonetheless, ultimately, this is something that did fall within the range of acceptability for the market. On the bigger front this week, the more important news for the market was the 2-week ceasefire announcement between the U.S. and Iran. Markets surged higher on Wednesday as we got this news Tuesday evening after market close. So we saw a big move higher in the markets on Wednesday. There's a lot of conditions attached to this ceasefire. One of them was a reopening of the Strait of Hormuz. Now, there's been a couple fits and starts with this ceasefire arrangement already. I think it was, maybe just a couple hours old, and then Israel was continuing to bomb Lebanon. Iran said, well, we thought the Lebanon situation was part of the ceasefire. Israel and the U.S. said it's not part of the ceasefire. So there is some fits and starts going on with that. But overall, it's a good thing to see at least some progress made between the two sides, and hopefully this will lead, towards everlasting peace, right? The markets, again, wasting no time to price this in as we saw an unwind of the energy trade, right? A lot of oil stocks and oil commodities down sharply on the news, and a move higher in some of your more sensitive growth areas of the market that had been hit pretty hard over the last couple months. So again, I expect there to be a lot of volatility around this, right? I mean, one day everything looks great, then the next day it's going to seem like the deal is off or that nothing's coming together. These negotiations are messy, naturally, and again, we have to remember here, we are negotiating with a terrorist regime, right? This is not normal negotiations. This is not U.S. and Canada or U.S. and Mexico or the European Union and the U.S. You're dealing with a terrorist organization, right? And so there's not a big trust factor there. Okay, that's number one. And number two, I think there's a lot of show and prove in this where, each side is going to have to show, right, that there's certain things they're willing to adhere to. So there are peace talks scheduled for, I believe it's next week in Pakistan. And the U.S. contingent is going to be the Vice President J.D. Vance, the Special Envoy of Steve Witkoff and Jared Kushner, and then there's going to be some parliamentary leadership from Iran, and obviously Pakistan's going to mediate the whole thing. So overall, we're all rooting for this to be over soon enough. Markets certainly liked what they saw, and it remains to be seen how quickly we can get past that. So let's take a look at the markets here together. We are seeing, right, the markets, as we recapped 2 weeks ago, markets bounced off a key support level, a very familiar support level at that, and have moved higher in a pretty swift way. Now, we've created kind of a big gap in price with the move from Tuesday's close to Wednesday's open, okay? And a lot of times when you have a big gap like that, the market tends to come back down and revisit that gap. It's called fill the gap, right? Markets like to kind of fill out the chart. And we've had a pretty good change in our volume profile where we see a lot more green down here on the bottom. Buyers have stepped in, so that is a good thing. I personally, not to nitpick, I would like to see a little bit more volume supporting this move. That could change over the next week or so. If that volume comes in, it could really be something that suggests that this is meaningful. But as of right now, right, higher prices are better. It is good to see that. Now, one of the things that was important to see after a big gap up on Wednesday was that we didn't just roll over and play dead on Thursday and Friday. And we've had a little bit of follow through there. Now, naturally, markets today, basically down a touch here on the S&P, down about 0.1%, had been up earlier in the day. And speaking of the fits and starts with the negotiations with Iran, Trump came out around midday and said, Iran is already, messing around, for lack of a better word, and they should realize they have no cards to play. And the market took that as, a sign that maybe the progress that we thought we had is not as far along. So markets came back down to the flat line. So about 25 minutes ago to the close here, we'll see how things close up. But overall, markets certainly have moved a lot in a short period of time. The S&P has moved from about 6,350 to about 6,817 in a very short period of time, so about 400 plus points on the S&P. And again, this is what we've talked about. When people get too negative, when you get too many people on one side of the trade and sentiment gets far too stretched to the downside, right? We talked about pushing a beach ball under the water and it snaps back up very quickly. So again, we will know we're all clear when the market can go on and make new highs, right? New highs. But again, this speaks to how quickly things can change, right? And that's just 2 short Fridays ago, we were pressing the lower end of this, and now here we are. We're right back up into the upper end of the range. So that's a good thing. We want to continue to watch that. Now, one of the things, before I move on to other things that we have to talk about, because this is a pervasive thing that keeps happening, software stocks this week are once again getting creamed on the narrative of, let's call it the AI Armageddon, right? That AI is just going to come and just totally eliminate software, okay? And that's just absolutely preposterous. And I'm here to tell you that in a few weeks or a few months from now, when we look back at this and how ridiculous and how silly this period of time was, where all software stocks across the board, some we own, many that we don't, are just getting absolutely crushed in this market. And in the thesis behind this is that AI, and in this recent fit of rage, if you will, it's Anthropic has a new a new model, an AI model they've released that's supposedly going to totally eliminate software. I think it helps to understand that the foundation of AI is going to be built on software. Okay, it's not going to replace software. Software is going to be the layer and the foundational layer of which AI is built upon. So companies like Oracle and companies like Palantir and companies like ServiceNow and Intuit and even Microsoft, right, have all gotten sucked up in this. And I find it quite funny. I don't find price declines funny, but I find it quite funny that the AI doomers, who just a few short months ago told us that AI is just totally worthless and all the money we're spending on it is for naught, these are the same people now standing on the rooftop screaming that software is going to be replaced. And that software is not going to be replaced. It's going to be a very, very, very key part of the AI story. We are still so early in this story, and there's still a long way to go in it. But naturally, this is what happens, right? When the markets are moving and a narrative takes hold, the high flyers are the first to get hit. Right now, there's probably 40 or 50 stocks in this group that are down 20, 30, 40% year to date. And so the positive to take from that is look at how well the market has behaved, given that big sector, which is very important, has not performed well, right? That's the first thing to take away. And the second thing to think about is, right, if those stocks led us into this correction, what is this market going to do, and how much higher is it going to be when software starts to participate and row in the same direction of the market yet again? So again, folks, I will tell you, when stocks, certain stocks are like lightning rods, right? We've owned NVIDIA for many, many years, and there's been many instances, and I'm sure many of you remember, where, quote unquote, the sky was falling, the story was over, their best days were behind them, and the future was going to be grim, and yet NVIDIA just continued to go higher and higher and higher. And so the story is not over for Palantir, it's not over for Oracle or any of these, ServiceNow or Intuit or Microsoft, you name it. Not only is their story not over, these are fantastic buying opportunities in these stocks. And, to put it frankly, algorithms, which are largely in control of how the market moves on a day-to-day basis, they're not very smart. They're not very smart. They grab a narrative and they just sell into oblivion. And so there will be buying opportunities that will come out of this. The software stocks that we own, we will continue to hold with high levels of conviction, and we will add to positions or add new positions where we think it makes sense, right? And so if people want to frantically sell really good companies, we will be there on the other side to buy them each and every time. But overall, again, markets putting in a good bid this week. We're seeing interest rates move down. We're seeing oil move down, right? Those had been two headwinds for the market. And we're seeing the fear gauge, which is the VIX, which had been as high as 35, back down to 19. So that's good as well. Let's take a look at our AAII sentiment survey. How do members of the institutional side of the market feel about where the market will be in the next 6 months? Bears continue to outweigh bulls 10 weeks in a row. Last week was 9 weeks in a row. And look how that worked out for them. Right now, all of a sudden, the market is on a 2-week winning streak here, right? And yet people continue to be bearish. So this is a good setup for the market. There's no excessive optimism in the market, and we continue to believe that things will work out this year just fine. Again, choppiness and volatility is the price we pay to invest, right? And so markets have a way of convincing people that the best days are behind them just because they don't go up, right? And you all know this, right? You're all very intelligent investors. You follow along with this podcast and you've been in markets for a long time, but many people out there expect stocks to go up every day. And while that would be wonderful, that is not the way that this works, and this is why that not everybody can be successful investing in the stock market. Let's take a look at our, hold on one moment here. We're going to move this out of the way. Let's take a look at our fear and greed index. Okay, investors, retail investors, still pretty scared about the whole situation. They've moved up from extreme fear a week ago. 2 weeks ago was 14. Last week was 23. Now we're up to 38. So, still skepticism. And skepticism is good, right? Big rallies in the stock market are built on skepticism and die on optimism, okay? They climb the wall of worry. You've heard the wall of worry. There's a perfect wall of worry, brick by brick, built here for this market to climb. And ultimately, we think the setup continues to be good. So Q2 could have continued volatility, could be a little choppy, but we think things will work out just fine. And ultimately, let's finish up with our next week, U.S. economic reports and Fed speakers. We have existing home sales on Monday. We have a bunch of Fed governors speaking next week. We got the producer price index coming up on Tuesday, right? We got CPI today. Next week will be PPI. We expect that to come in a little bit higher, right? They're estimating a 1.1% readout on that versus 0.7% last month. So again, let's see how the market takes that. Hopefully it takes it in stride. Import prices on Wednesday, a bunch of Fed speakers, initial jobless claims on Thursday, and then really nothing on Friday. So all in all, it is now time for the markets to look ahead and start to focus on earnings season that is on its way. This will be a good distraction for the market. We'll continue to watch the ceasefire here and see how it works out. I guess we have until Tuesday the 21st for that 14-day ceasefire to see if a real peace deal comes together. So overall, we feel good about where the market has really been and where it's headed. Constructive action this week. But as always, if you have any questions, reach out to us. We're always here to talk to you about anything that matters with your money. I hope you have a great day and a great weekend, and we'll see you back next week for Heritage Insider Weekly.